All right, Bulls and Bears. We're back with another dose. We have a lot of big developments here, economically, financially, and we're going to get into it today. We've got the tariff protests exploding, and this is the hands-off protest happening across the country, but also even in other countries. Well, this is crazy. We're going to get into that. We're going to get into the tariff war, the trade war, and what just happened here today. By the way, this is Monday, April 7th. 2025. Let's go ahead and get right into it here. First of all, let's take a look and see what happened in the markets today. We're looking at the S&P 500, and it opened big time in the red. We dropped down to about 48.75. It recovered a bit. We ended up closing above 5,000 on the S&P. The day, though, we were still down 0.23%, almost 0.25%. The Dow Jones today, we're down almost 1%. And the NASDAQ, we're actually up slightly on the NASDAQ. So it wasn't as crazy as a lot of people predicted. There were predictions of a Black Monday and the biggest market crash of all time. Of course, we did not see that. And we know the powers that be behind the scenes. At least most of you should know that there are forces behind the scenes, such as the plunge protection team and other ways they can keep these markets propped up. Even if the investment community is scared and they want to sell off, there's other ways to keep the market from plunging. Again, plunge protection team, many other ways out there they keep this propped up. And there was speculation, though, that these agencies or entities would be defunded. But of course, the ones in power right now, they don't want the market to crash under their watch. So they're not going to defund the groups or the agencies that actually will keep the market from crashing. Of course, they would never do that. That would be like shooting themselves in the foot, right? Now, let's start with this here. For those that are looking for a big turnaround in the economy very quickly, I think you're going to be disappointed. Even the administration came out and they said it could take 2 years before these tariffs could result in an American manufacturing boom. And you know what's going to happen? Even after, if and when jobs do come back, manufacturing jobs come back, it's not going to make things cheaper because the demand for wages here is so much higher than these other countries. In fact, I would argue that if jobs come back, it's going to be more inflationary versus deflationary, even with the tariffs. Because, again, you're going to have to pay such high wages here to American workers, manufacturing. And it's almost like, just look at the grocery stores right now. Things made in other countries are cheaper, right? And, of course, they're trying to change that with the tariffs, but things are cheaper. And it's looking like the current administration may not realize this. You've got to bring down the cost of living so companies will want to come back here. Companies do not want to pay these higher wages. That's the whole reason why companies exported jobs, outsourced other jobs to other countries to begin with, is because the cost of labor is so much cheaper. But in a country, the United States, that has $400-something thousand median home price, you're not going to be able to pay these people low wages. And if you do, you're going to see strikes all over the place, like we saw in 2024, a record number of strikes across the country. Speaking of people striking and holding signs and walking on the sidewalk, take a look at what's happening here, protesting the current market drop and protesting basically everything this administration is doing.
The sounds of protests happening across the country, massive protests aimed at pushing back against what organizers are calling a, quote, hostile takeover of American rights and freedoms by President Donald Trump and Elon Musk. You're looking at video showing protesters lined up along the sidewalk in West Palm Beach, wide movement called Hands Off, nearly 600.
Look at this, Illinois, Minnesota, Georgia. Look at all these people, folks. This is massive. Look at the size. Look at the size. Look at the number of people in there. It's kind of blurry, but this is massive, folks.
Demonstrations coast to coast, from D.C. to Boston to Texas and California, protesting President Trump's policies, and D.C. to Boston to Texas.
Hang on, let me rewind that one. Look at that. Wow, folks. That's a lot of people. It's interesting. I mean, when you look around, you see different opinions being expressed about what's happening. And sorry, I heard a phone going off back here or something. A different opinion on what's happening. And some people say that this is a great buying opportunity. That's what I think. This is when markets drop, I'm loving it because especially now, if you knew this was coming, which you should have known this was coming for a while, this is a buying opportunity, right? Other people that are passive investors that sat back and watched their 401ks get pummeled, they're upset. And maybe that's a lot of these people out here that you see walking on the sidewalks and holding signs and protesting all this, because maybe they lost a lot of their wealth, or maybe they just don't like other things going on here, right? With the whole investigations and the cutting of these agencies. Maybe a lot of these people are federal workers, or their families federal workers, and they lost their jobs, or they know someone that lost a job. Either way, I mean, you got two sides of the aisle here still, like we commonly see in the United States as far as political differences. All right, just had to pause there, take off my jacket. I got a little bit warm in here. Moving on here, folks. We just have some new developments, though. Just came out today. What's happened is basically the president threatened new 50% tariffs against China because China had retaliated against our initial tariffs, which were 25%, I believe. And here was the threat, basically. If China doesn't remove its retaliatory duties by tomorrow, we're going to see a new 50% tariff placed on China. So it's going to be very interesting, folks, to see this back and forth, to see how this is going to play out. But when you look at the size of the U.S. economy globally, we do have the leverage here. Let me bring up a chart on this. And they put this out over at Visual Capitalist. And let me just make myself smaller so I can enlarge this here. And as we can see here, the global economy, 115 trillion total combined. Well, over 30 trillion of that, and this is projected for 2025, 30 trillion of that is the United States. Why is that? Because we have the printing press that can go endless. We have the currency that could just be created in endless amounts, right? So, of course, we're going to be able to buy the most stuff, and therefore, we have the most GDP, if you want to call it that, gross domestic product, which is the gauge of the economy growing, which is silly, but that's the way it's looked at. So the more money you print and the more debt people take on, the more it's looking like your economy is growing. And I disagree with the whole premise of how the economy is gauged as growing, but that's what it is. So we'll just stop at that for the moment here. China, just under 20 trillion, us 30 trillion, right? Again, we have the global reserve currency. We can create the dollars out of thin air to infinity, and therefore we can buy the most stuff. So yeah, we're the world's largest economy. So yes, we do have the leverage because of that global reserve currency status. So this is how we're basically able to put on these tariffs, because the country has this currency and other countries are still dependent on the US dollar for the most part. It's still over 60%. The US dollar is still over 60% of global trade is denominated in US dollars. All right. And we'll talk in a little bit here later in this report about how we're going to make money off this, buy the dip. Crypto is selling off big time as well. And the question is, how deep and how long is this dip going to be? Well, we're going to get into that here in just a little bit. I'll be jumping into the markets here with a little more price declines once we see a stabilization after the drop. A few days of stable prices, I'll be jumping in. But with everything happening right now with the escalation of the tariffs and the back and forth, and now raising the tariffs on China, for example, up to 50%, I'm still waiting. I'm still sitting back here waiting to see what happens and see how this plays out, right? Because this is a lot of day-to-day developments that I think we need to be cautious about before jumping into these markets. All right, but let's talk quickly about what led to this 50% tariff now that we're going to be levying against China. Well, it was this: China to impose 34% retaliatory tariff against all U.S. goods imported from the U.S. And let's see here. The finance ministry out of China said it would impose a 34% tariffs on all goods imported from the U.S. starting on April 10th. China urges the U.S. to immediately cancel its unilateral tariff measures to resolve trade differences through consultation in an equal, respectful, and mutually beneficial manner, the ministry said. It further criticized Washington's decision to impose these 34% of additional reciprocal levies on China, bringing the total U.S. tariffs against the country to 54%. They say it's inconsistent with international trade rules and seriously undermining Chinese interests. Well, very interesting. We'll see how this plays out, folks. But an additional 50% on top of the 34. So could change by tomorrow. We'll see how this plays out. And that sounds like a lot, doesn't it? Adding those two tariffs on top of each other. So let me see how this is being reported over at BBC. I found BBC to be pretty accurate here. If it is imposed, U.S. companies would then pay a total rate of 104% on Chinese imports, as it comes on top of 20% tariffs already put in place in March and the 34% announced last week. Right, now let's get into some individual stocks here. One we've been talking about a lot over the past 6 months to a year is Nvidia. Nvidia, we saw the chart. It was unsustainable. And here it is once again, the long-term chart where it went nearly parabolic. Well, look now, we're under $100, folks. $97. We had seen a peak there of about $140, just under $140. We told her that was going to happen. That was a very nice trade. And also this big dip we're seeing in the stock market, it's going to be a very nice trade. Again, I'm waiting to see kind of a bottoming out pattern and less volatility. Once I see that for a few days, I'll be jumping in maybe about 10% of my investment portfolio. If it drops more, maybe going another 10, 15% if we see a bigger drop. And ultimately, this market's going to come back up just like it always does. Now, again, we have to say this. There's this fear out there that this is going to be the end, that there's not going to be any recovery because of everything that's happening. And they could be right. That's why I'm not going to go all in. Dipping in 10 or 15% of my funds, it's not going to be the end of the world if this thing drops and never comes back. If we see a world-changing event unfold, or a black swan, or a systematic collapse of the entire financial structure, which, again, I don't think is going to happen. Could it happen? Possibly. But, if you play it right, there's nothing to worry about. There's no need to panic. I'm seeing so much panic out there. And all these protesters, again, I'm not sure what they're upset about. Maybe their 401ks got nailed and they weren't ready for this downturn. Maybe they weren't paying attention to the obvious financial situation that was ahead of us. We've been talking about it here for 6 months to a year. If you're paying attention, folks, this is a buying opportunity, right? And maybe you're not an investor. Maybe you're just watching the news just for the fun of it, or watching the show because of the fun of it. But, folks, it's an opportunity if you're in the right position. All right, moving on to some other news here, folks. We've got another so-called boycott of Walmart. This is supposed to happen on April 14th, and we've seen these boycotts in the past. You drive by the store and the parking lot's still full of cars, right? Very small percentage of people actually participate in these boycotts, right? Walmart responds to nationwide boycott as stores face blackout. And they're not going to see a blackout. The protest branded the Walmart blackout is scheduled to last, from April 7th to April 14th. So the April 7th is today. And I guarantee if you drive by your local Walmart, the parking lot's going to be full. But here's what they're saying. Walmart has issued a response to a growing nationwide boycott that began on Monday, as some Americans pledged to avoid the retail giant for a week in protest over a range of economic and political grievances. Quote, serving communities is at the heart of Walmart's purpose to help people save money and live better, said the company in a statement. As one of the largest corporate taxpayers in the country, not only do we pay our fair share, we are an economic force multiplier, strengthening communities nationwide through job creation, supplier growth, and over $1.7 billion in cash donations last year. So what are people protesting? They're protesting the low wages, right? And the lack of benefits, and how they have people working part-time to avoid giving them benefits. All right, and here's what one organizer put out there and what they're saying here. Quote, we're boycotting Walmart because they've become the symbol of everything that's wrong with corporate power in this country. Our mission is simple. We want these corporations to start paying their fair share of taxes so the American people can finally be relieved of the burden of federal income tax. So this guy thinks if corporations pay more, that people won't have to pay these taxes here. He continues, we're also calling for real equality across the board without question. This boycott is about showing them that we are the economy. We fund their success, and we can shift our money to local businesses or simply choose not to shop at all anytime we want. If they want our dollars, they need to start respecting the people who keep them in business. Now, what do you guys think about that? I disagree with a lot of what he said. I mean, yes, they're a major power, But what he said here about choose not to shop there at all, a lot of people don't have a choice. Walmart's the only game in town. Good luck going to small businesses and finding everything you can find at Walmart. Walmart has everything. They dominate. You could drive a 100-mile radius and still probably not find everything that you could buy at your local Walmart, right? Maybe in some areas, but I don't think people have much of a choice. They can boycott it for a week. It's not going to make much of a difference because whatever they didn't buy this week or this 7 days, they're probably just going to double up the following week, right? So these boycotts end up doing nothing. And I'm not saying that this is bad. I mean, people are trying to make a difference and fighting back against, quote, corporate America, but it usually is a nothing burger and usually doesn't make any difference. I mean, am I wrong? Let me know what you think down in the comments about this here. And the whole thing about paying taxes, I doubt if they're going to bring in enough taxes from Walmart to make a difference. Even if they did raise the taxes on these corporations, what are the corporations going to do? They're just going to raise prices on the goods. They're going to drop their wages and not give as many raises to the employees, right? So maybe I'm just negative thinking, but that's the way I look at it here, folks. All right, people, what else do we have to cover today? Let's talk about Mr. Jamie Dimon. Chase, JP Morgan Chase CEO. He says the tariffs will boost inflation. Really? Slow and already weakening U.S. economy. Do you agree with him? He is the first CEO of a major Wall Street bank to publicly address the sweeping tariff policy as global markets tumble. Well, actually, markets kind of stable off today. We'll see if the sell-off continues here in the coming days. All right, and really only time's going to tell who's right about this. And I actually agree that I think these tariffs are going to be inflationary, right? The jury's still out on if ultimately this would be a good thing for the U.S. I tend to agree, I tend to agree with Dimon and some others that this will be harmful and it's going to make things worse, right? Maybe I'm wrong. I hope I'm wrong. But I think it's going to be inflationary, and I think the inflation is going to stay. And I mean, we've seen oil come down. That could be a deflationary factor that could help things out. But we're going to see how it ends up, folks. I mean, place your bets down below. I mean, let me know what you think about this. Am I wrong? Is this going to ultimately make things better? Let me know if I'm wrong down below in comments. And when I say better, I don't mean overall. There's people making money off this market drop, but we're going to make money. We're going to buy this dip, and I think they're going to push this market back up. But when I say, is it going to do more harm than good, I'm talking about the entire middle class of the U.S., not just myself, not just investors, not just people actively watching the market. I'm talking about the entire U.S. workforce. Will things become easier or better for the majority of Americans, not just investors, right? Not just us here on this channel, but the majority of the American working class, the middle class. Is it going to become easier, or are things going to continue to get more expensive, and are things going to get more difficult? Are the mega wealthy going to continue to get even wealthier while Americans continue to be buried under this debt wheel? Right? If you think things are going to get easier for most people, let me know down in the comments. I'll love to read, not just your comment, but give me the reason why and how this is going to make things better. Are a lot of manufacturing jobs going to come back here? And if they do come back here, are things going to get a lot cheaper because they're made in the U.S.? Or are they going to be more expensive because the cost of living here is so expensive? All right, to me, it's just pretty simple and common sense, but maybe you can shed some new light on my theories down below in comments here. All right, but what's happening here, all this panic, all this turmoil, financial scares, not just the U.S. Look what's happening across the globe here, folks. We've got Asian stocks saw their worst drop in decades after these tariffs. So this is financial turmoil, folks, across the globe, all because of some tariffs. Crazy times, folks. Let me know what you think about this down in comments. Make sure you subscribe. I believe the button's right down here somewhere below my fingers. Help keep this channel alive. Appreciate you being here. Again, your thoughts down below. We'll talk down there. Keep stacking, everybody. Bye for now. Big love. Talk to you soon. Peace.